Hey everybody, Dr. Sam here. How we doing? I'm here today to kind of go over an inventory method called FIFO under the perpetual approach. I've done a previous video on FIFO, LIFO, weighted average, specific identification, and it seems to be really popular. So I thought I would do another example, but this one's going to be just on FIFO only. And just a quick little reminder, FIFO is best used when you're in a deflationary situation. So when prices are going down. So if you're in the tech industry, like you're thinking about like laptops and phones, iPhones, whatever kind of phones you may have, think of like TVs. So any type of tech industry, the prices tend to go down over time. So if you're in that form of industry, you probably would be better off using FIFO because in that case, what'll happen is your inventory write-off is going to be higher than if you're using another technique. So you get a bigger bang for your buck and you pay less taxes. Okay, so let me share my screen and let's bring up a little Excel spreadsheet here. So let's go ahead and complete this little mini problem here. Hopefully you'll get a good idea of what it's like. So on January 1st, it says we started off with 8 units and they are $8 a piece. And when you do this little calculation, 8 times 8 will give you 64. And you can see that right now our data and our answer correlate. So I'm going to try and keep this color coded for you so that you can see how this thing progresses and it compares to the data that was given. So in the next date, we see that we purchased 2 units on January 3rd, but take a close look. These 2 units cost us $6 a piece. And the original inventory balance cost us 8. So you're already seeing a decrease in price. So 2 times 6, there's your 12. So now here is the most important part that I find where students kind of make the biggest mistakes, right? When they do this section right here, they kind of mess things up. So you have to make sure you record this properly. So you have to have the 8 at the 8 along with the 2 that we just acquired at 6. So if we do this math, 64 plus the 12, that's going to give us $76. Now, I want you to take a close look at this. So if for some reason, let's just pretend I couldn't see that January 1st information. I should be able to see exactly what is in inventory on January 3rd. And I have to make sure my inventory is tracked chronologically, real critical, okay? Or else I might make a mistake while I'm doing an assignment or doing a test. And usually you see this content in either accounting 1 or accounting 2. All right, so the next transaction looks like we sold some. So on January 10th, we sold, it says 6 units. So now here comes the question, which 6 did you sell? You just pick 6 at random, you take the first ones, the last ones. Well, remember what FIFO stands for. Stands for first in, first out. The word out implies sold. So the first 6 that came in. So look at the green row. Look at the January 3rd row. That's where you want to pull your data from. So we're going to yank out the first 6. So 6 at 8. So 6 times 8 is 48. All right. So now that we show the 48, now this 48 is what we get to write off on our taxes. So literally, this is like an expense. It's called cost of goods sold, as you can see from here. The more cost of goods sold you have, the less tax you pay. The more you can write off, the less tax you'll end up paying. So what do we have left in inventory? Let me use the same color coding I used before. So out of the 8 at 8, I sold 6 of them, so I only have 2 left. So 2 at 8, along with the 2 that were still there at $6. So inventory has now decreased to 28. And you can pretend this is thousands or millions or whatever, okay? So we had $76 worth of inventory. We sold 48 of it. and now we're down to 28 in inventory, $28 worth. And that is made up of 2 units at 8, 2 units at 6. So now here comes January 17th. And on January 17th, it says we bought 8 more. And take a look at the cost to us. These are the same things we bought back on January 3rd that we already had in inventory on January 1st. Back on January 1st, they were costing us 8. On the 3rd, they were costing us 6. Now on the 17th, all right, they're actually costing us $4 a piece. So it's like gas prices, right? They fluctuate up and down, and sometimes they're going straight up, and sometimes they're going straight down. So right now, our costs are going down, and we're really happy about that as a buyer. Right? So 8 units at 4 for 32. So in our inventory, we put this whole date in orange. In inventory, we have the 2 at 8 that we had from the blue from January 10th. We still have the 2 at 6, and now we have an additional 8 at 4. So in our balance column, we are looking at $60 worth of inventory. Okay. And now here comes January 31st. And on January 31st, it says we sold 6. Remember, we sold 6 on January 10th? We're selling 6 again, right? But take a look at the most recent balance data. We've got 2 at 8, 2 at 6, 8 at 4. So think about that. Remember, we're doing FIFO, so the first 6 that came in are the first ones that go out. So we're going to grab the 2 at 8s. We're going to grab the 2 at 6s. And we're going to grab 2 from our most recent purchase, and they cost us 4. So let me do a little quick Excel math here. So I want 2 times 8. And I want 2 times 6. So we get to learn a little Excel here, whether you wanted to or not. And then 2 times 4. And that gives us $36. So before I even fill out the inventory column, look at here we sold 6 and it was $48 worth of cost of goods sold. Now we sold 6 again, but now it's not 48, it's 36. So look at that. So we've got a $48 write-off, a $36 write-off, and these are 6 units both times. Anyways, what do we have left in inventory? We've got 2 at 4 that are left over. Actually, we have 4 left over at 4, right? So, actually we have 6. I don't know where my head is at. Let's fix that up here real quick. So we've got 6 units, because remember we had 8, right? And we just got rid of 2, so we got 6 left. So 6 times 4 is 24, and that's what's left over. Right? So this is an example of the FIFO method. I hope that was very helpful for you. Look for the next video. I'm going to use the same data and I'll use the LIFO method. And what I want to focus one last thing on here is the total cost of goods sold. So 48 plus 36, grand total write-off. So using the FIFO method, we got an $84 write-off in this situation. So if I do the next video and I'm using LIFO, same data, right? We're going to see this number being larger than under the LIFO example. So look for that. All right. So hope you enjoyed it. This is Dr. Sam again, and good luck in your classes and on your tests and your assignments, and hopefully you'll kick some butt. All right. Take it easy, everybody. Bye-bye.